Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. Well, it was a terrible day today on the market. The market was down 1,200 points, which not looking very good there. I fortunately had some shorts on, so I did okay. But overall, boy, I tell you what. Not the kind of market that you want to be trading in. Just a tough market all the way around. But hey, we can. There's light at the end of the tunnel. There's things that we can do. So it's not totally bleak. Basically, what's been going on, of course, is this reaction to the. It's. Let's see if. See if we can get it back there. There we go. I think we're back. Anyways, reaction to this movement down. Basically the Nasdaq is its lowest level since about 2022, which is not good. Really not good here. And so in all, we got to kind of take the good with the bad. But let's take a look at the Nasdaq. Before we go too far here, and let me pull this up and get the Nasdaq composite up here. Let's see. There's the Nasdaq composite. There we go. And as you can see, we're just continuing this march downward. The tech stocks are just taking it in the shorts. The movement down, we're under that 200-day line. And so just a lot of selling activity here. The techs just are not looking very good right now in general. And it's just kind of a tough day on the street. Here's what I've got. I'm only in four things. I'm mostly in cash right now. These are my current long holdings. As you can see, they're all down. They're all down today. Chevron, Mosaic, ExxonMobil, and XLE. Now I did add a little bit of ExxonMobil yesterday, but fortunately I had I bought these a little bit before the pivot on each one of these, so the damage wasn't quite as bad as it could have been, but I'm still fairly lightly exposed to the market. My biggest exposure to the market, of course, is with shorts, and those did pretty good actually. The Boeing short, we're up on that one. We're up on the Salesforce short, and we're also up on the Disney short. Now, these are bear put spreads where you buy the higher put and then you sell the lower put, and then it gives you a potential to make money as the stock moves lower. Just kind of give you take a look at the Boeing short that we did. We started up here. We bought it and then it kind of bounced up, but it is moving down nicely. I don't know if that's nice or not, but let's take a look at the live chart for Boeing. Of course, as this one goes lower, so goes this one. This has the potential to make about for each contract has its potential to make about $565 for a $435 risk. We should have some more of these others ones out. I'm going to probably be putting out a short a bear put spread on Shopify, as the Shopify numbers have not been fairly good. So that one might be a good potential to short. So that said, also in addition, we have a short on a bear put spread on Salesforce, and of course Salesforce moved lower today. Let's take a look at the Salesforce chart. And of course, that's CRM for everybody out there. And this one we put on a few days ago, and it is moving lower as well. So that one is making money. Fortunately, that one is making a little bit of money here as the price of CRM Salesforce goes down. That is starting to pick up some steam here. Basically, the way that works, of course, is that as it goes lower, the value of the trade goes higher. So hopefully, if the trend continues on Salesforce, this is just one contract here. This has the potential to make basically only $225 per contract. So the risk is about $225, and the potential, the gain is about $225 because this is a credit spread. So this one is moving down as well. And then, of course, the third one that I have on currently is the Disney spread, and that one basically is moving very nicely as well. Disney fell today to 112.61, and that one is I have two contracts on it. It's very, very light exposure on these. These are all risking $500 or less on this one. This has the potential to make about $670 as long as we continue in this green zone. It looks like we're going to do that. So this one is a bear put spread, basically a 115-110 bear put spread. Of course, we'll make all the money if it moves basically to 110. If it's at or below 110, we will make the $670 on this trade. So kind of a cool trade out there. Let's take some questions from TikTok. Thanks for coming and taking a look today. So appreciate it. Nothing working right now. Well, nothing. There's very, very few things that are working right now. Some of the things that are working are these bear trades. And let me get some water here. If you want to take a look again at these bear trades that I have on, I have 3 of them on right now, and they are working, but they're only working because these 3 stocks are going lower. And I suspect we're going to have another bear trade on Salesforce. I want to show you that chart right now for Salesforce. I'm going to try to put it out probably Friday if I get a fill on it. And that one is, of course, for the symbol SHOP, SHOP. And I do think that we're going to see Shopify move significantly lower. I think we're going to see it move significantly lower, but I haven't yet gotten a fill on. I haven't yet gotten a fill on the on the short on this one. I suspect, but what we're going to do probably on this one, this is about at 410. We're going to probably short it by buying a 410 put and then selling a 400 put. That's probably what we're going to do. It did trade up a little bit. There is some resistance on Shopify right about 400. I think you can see it here. Yeah, there we go. So you can see there's sort of a floor right there at 400. When we do the short, we will probably, what we'll do is we'll be buying probably the 420 and selling the 410. This is a relatively conservative trade, but in this kind of market, that's what you want to be making. You want to make these little pops, these little conservative trades. So we haven't got fill on this one yet. It's not out there yet, but if you're interested, of course, you can get on the Action Trade Alerts. I'll probably put this one out if we do get a fill on this one at www Dallas Trading Floor. So Matt is asking a question on short W. And I guess that's Wayfair, right? I think that's Wayfair. This has been a terribly weak area, so it may be a good potential short. Yeah, that's looking like a short to me, Matt. That's looking like a short to me. Let's see. Okay, if it pulls up to the 21-day line, my only concern is I want to see this kind of move up a little bit, and it is moving up in the after hours. I definitely like this action for a short. You don't want to short it when it's pulling down. The ideal is that you get ready to short it, it pushes up, and then it pulls down. Let's look at the 10-minute chart, see if we can construct a short on this one. Yeah, it looks like 69 is sort of where the resistance is. So let's see if we can possibly put together something that might resemble a short. So I'm going to say it looks as if by the end of the month we're going to be probably, I think we're probably going to be at about 60. Let's take a look at the weekly chart. Yeah, this is moving down, and I do believe, yeah, I think we'll be, let's see if there's any support. Now, interestingly enough, it may go a lot lower. This is the flash crash here. So it may go down as low as, it may go down as low as 50. So I think 60 is reasonable. I don't think there's any support here. So I think as this goes down, it goes down further. Let me see if we can put together a, let me see if we can put together a, let me see if I can put together a short on that one. Let me just pull this up real quick and get this here. Not quite what we want. All right, let's see if I can make this happen here. Yeah, there we go. All right. And this is kind of an interesting little thing that I typically type to use to kind of see if I can put together a short. We're looking to put together a short on W, Wayfair. So here's the thing. I believe based on what I'm seeing here that, we're looking at possibly it coming to I think it's going to be probably at 60 or below in about a month. So an easy way to do this is to use option profit calculator here and just see if we can find an option pair that will work. And I'm going to say we're going to do this for W, which is basically Wayfair, and that's going to give us a current price in a second here. Hopefully, yeah, there we go. All right, so it takes a bit of time to load this because I've got the ASRIC. So 67.45 is the current price. I'm going to say we're going to expect about a $60 price on this one. Basically, at I'm going to looking at out about a month here. So currently we're at the 5th of May. So let's see if we can go. Let's say to the 3rd of. Well, let's go to the 10th of June. I think that would make more sense. I'm going to select. Let's see. Let's say the 10th of June. Let's put it there. June 10. That's a Friday. And then about $500 risk. I don't want to risk any more than that based on this market volatility. Let's take a look to see if we're going to get some good options here for shorting W, which of course is Wayfair. And let's take a look to see. Wow, we've got some nice. There's a debit spread that has a 64% probability based on this. Now this isn't always totally correct, so don't take this as gospel. But this one looks, wow, this is a very, very good potential. This is a debit spread. Wow, look at the possibility of that one. Let's just take a look at this one to see kind of where we're going. Wow, I can't believe it. This is very unusual to see this. This is, yeah. So this one pays, let's see, this pays about, okay, break even at about 92. Interesting. All right, so this one is a June 17th, 95.90 put spread. That's interesting. That's interesting. It would be that way. This one has there seems to be an anomaly here, so I wouldn't take this as gospel. But if we go back, let's see. Let's go back to the chart here and see if we can see the chart. Let's see. This would be for Wayfair. And so interestingly enough, there seems to be an anomaly. So I don't know if I would do that one, but definitely this is definitely shortable. I think you're definitely right about this. and we would be doing about a 95.90 put spread based on the June 15th expiry. So that's very interesting. Let's see if we have another one as well. If we can come up with another one here. Let's see if we can go back one. This one, I think I like this one a little bit better. This other one. So let's see if we can get back to that one. And that this calculates these spreads. So this one I like as well. This is a yeah, I kind of like this one better. This is a 78.70 put spread. So it's a smaller ratio, which I like. And this one, boy, this one looks good too. I don't know if you get a fill on this. That's the only thing. That would be my only concern. This just looks too good to be true. Yeah, I don't know if you can get a fill on this one. This says it pays $1,050. I think that there's an issue here with probably this is going to readjust. I don't think you could do this one and get this for $450, but you could try. You could definitely try. I tried to do one on Shopify. This is telling me that the overall sentiment in the market is extremely lower. But this would cost $450 out of your pocket, potentially as much as $1,000 on this spread. So very interesting. A lot of interesting opportunities in the put spread area. So very, very good idea possibly to short that. So I agree with you. I do agree with you, Matt. I think that one might work very, very well. So let's take the next question. Let's look at LNG. Now, this was one that we can probably go long on just because, this is a good area, the gas area. This is one of the few areas that's working in the market. Tech is totally not working, but gas and oil, or oil and gas, they seem to be working fairly well. This is the weekly chart for Cheniere. Let's take a look at it. And boy, I tell you, we had a nice move on it. Look at it after hours. Yeah, this is on my watch list. I did not buy this one today. Probably should have. But yeah, this is looking very strong. Looking very strong. And yeah, we pulled back a little bit. What we did is we came off of this 21-day line. We went all the way up to the pivot, which is 149 here, and then we pulled back. So this is not a bad place to buy it at all. This is not a bad place to buy LNG because it seems to be getting some strength, some support at the 21-day line. Let me take the technicals really quickly on this one to see. And I have been trading LNG. It's one of my favorite stocks right now. Okay, so basically at the 21-day, we're only 2% above the 21-day line. That's a good place to buy it. By the way, when you're buying these shares, and you're buying them long like this, you want to try to buy it relatively close to that 21-day line. Less than 5% is ideal, either up or down. So that kind of fits the bill there for LNG. So this is possible. This is a potential looking very good. This is looking very, very good. Let's look at the checklist on this one. It fails on just two areas, and that's earnings per share and earnings per share rating. So I'm not too concerned about this because that's a cyclical stock. But let's go over here, check on earnings for LNG to kind of see where we're going. Yeah, boy, these earnings have just been strong. Look at this. The quarter's just ending. Now, they do have a loss. They are in a loss position because they have built out two natural gas trains, one in Sabine Pass, Louisiana, and the other one in Corpus Christi, Texas. So they're definitely still building out. But that's a little bit less. I did a little research on that, a little bit less of concern. What's interesting is their sales are just going through the roof. The Europeans are really not going to have too much choice, and I expect that they're going to have to buy more American LNG. That's just probably the case. And so this does look very, very good, Dan. Very good on that. So yeah, I definitely think that could work very well. Let's take a question from CVE. This is Let's look at CVE and take a look there. CVE. Okay. See, and that is, yeah, I don't know. Interesting. Oh, this is in Calgary. Okay, great. Oil and gas company. Yeah, this is looking pretty good. This is this would, I like this chart. I definitely like this chart here. Nice move above that. Keep just moving right up that 21-day line. So as long as you can buy it fairly close, reversal on the 21-day line, that would be a good place to buy it if you're gonna be in it. Let me see if I can bring it up here. There we go. So let's look at the technicals here. And we're pretty close. Yeah, 17. Okay, 17%. So let's go to the daily chart to see, get a little bit more granular look at it here, and see if we can get something that's decent. Yeah, it's a little bit extended off of that 21-day. That's a little bit of concern for me. Hopefully this will. There we go. Okay, for the 21-day, yeah, we're 11% above that. A little bit high to buy this here. So here's what I would do on this one. Basically the correct buy point on this one, a consolidation base, a third stage consolidation base, was way back here in March, in basically December of last year, and it was at 1348. Currently it's at 20. The price is 2038. So it's moving right up that 21-day exponential very, very well. But this is not an ideal place to buy it. Let it pull back and get closer to the 21-day line. Here's the thing for a buy. Right now it's at 11.37, which is a little bit too far off that line. I would wait possibly for it to pull closer to, closer to the 58.50. I'm sorry, excuse me, not 58.50. Excuse me, 18.10. That's where we need to. It needs to pull back down closer to 18. That's where you would buy it there, but that's looking pretty decent. So definitely good look on that. Good look on that. So oil and gas is really where you want to be, everybody. It's just one of those things. You just want to be in that oil and gas area primarily. That's really where you want to be exposed to the market. Just really isn't much else working. Please check Square after earnings. Okay, let's look at SQ. I doubt this is going to be doing well, just because, none of the techs are doing well right now. Juan, unfortunately, I wish that were the case. It looks like it's up after hours. Okay, 103, not bad. Surprising here. Looks like it did get a bounce after hours, but you know what? This is a downward trend. And again, here's the problem with the techs. They're just weak all the way around. There's no rest for the weary here. They're just not working. And this has the death cross. I tried to do. I did a bear put spread on this one. Made a little bit of money, but the overall trend of this is downwards. So I just think you got to be, either short it or stay out of it, because this just doesn't look good. It's just this whole sector. There's really not much you can do about it. 81 out of 197. It's just not the time to be in this area of the market. That's just the long and the short of it. It's it's really tough because when it's bad, it's bad, and it's all you can do. Let's take a look at OVV. Of course, OVV is a oil and gas company, so at least you're in the right part of the market here with OVV. Now, not all of the oils do good every day, so just remember that. But we've definitely got the kind of chart that you want to take a look at here. I have not been in this one in a while. I sold into strength. I haven't really done much. I sold basically on the 21st here. Now I sold at 57.15. I'm kind of waiting for a pullback to the 21-day line. I'd probably be betting in this again. I like this stock, but I've been selling. I sold this on strength, and I haven't done very much since. But what I think needs to happen here is we need a pullback to that 21-day line. If we get that pullback to the 21-day line, that's going to be a good place to buy it. We're just right where you could buy it. It's a 4.99% above the 21-day line. So you might be able to size a position in there now. I like this stock, but it is consolidating. So basically, you're going to have to buy it close to the 21-day line, let it come up, and then pull back. So right now it's pulling back, so probably don't want to do anything with it right yet, but it's got a very strong relative strength line. Look at this. It's just going right up. So this is the place in the market you want to be. The oil and gas E&P area, this is number 4 out of 197. So it's a very good area, very strong area of the market. If you're through earnings, they've got earnings in 6 days. I wouldn't buy this until it goes through earnings. Wait on this one. Put this on the watch list. It's a good stock, but let's see how it handles earnings. And then after earnings, that's possibly where you could make a move on this one. But right now, right now, and this is a tough market to trade. Let me tell you. Right now, I think you're in the right part of the market. Oil and gas companies are what you want to be looking at. But on this one, I think you want to wait for earnings. Earnings are going to be in about 6 days. So wait about a week. Wait until Wednesday. See how it comes through earnings with OVV. This is OVV we're talking about, and then possibly do a buy in it. But I like it, and I like the stock, and I like the area. So that's good. How about oil and gold? Here's the thing about oil. I know that gold. Here's the thing about gold. Everybody is touting gold, and I understand why. Inflation, traditional hedges, and all that stuff. But really, the best inflation hedge is not oil. And I know nobody's going to tell you this. Kramer's not going to tell you this. Nobody's going to tell you this. The best inflation hedge is oil. And the reason why is because it is in everything, literally. Like you go down to the supermarket, well, that came on a truck, and diesel fuel is $7 a gallon in California. So guess who gets paid? The oil companies. All right. Now, right now, we've got a government that does not want to drill for any more oil. So guess what happens? Everybody pays more. I mean, we have a government that thinks that they're going to run the economy on windmills, and I understand this. It's wonderful. I love this. I wish we were in that world. I wish we lived in that world where we could have windmills and unicorns and all that stuff, and it would all work and everything would be great. But the fact of the matter is, if we have inflation, there are several things that are going to go up in price. One of them, of course, is fuel. Now, you say, well, I don't drive a big truck. Well, it doesn't matter because the stuff that you buy comes on that truck. Another thing that's going to go up in price is shelter, because everything else, the wood and all that stuff to make the houses, that's going up in price. Now, it's not a good idea to buy the home builders. They're all struggling. But the REITs are doing well. Why? Because, when I was starting out, you didn't want to pay more than a quarter of your income in rent. Now, in many places in the country, it's the norm to pay 45% of your income in rent. So guess what? Houses, especially rental houses, are a pretty good inflation hedge. So that's also going to be a place. So I'm not so hot on gold because I think that you can do the same thing with oil stocks and some of the REITs, and I think that that's kind of where the leather really hits the road. That's where people have to buy those things. I mean, it's just a fact. And so it can be very, very difficult. And, it's just the way it is. Thanks, Juan. Are you seeing a buying level for Tesla? I wish I was seeing a buying level for Tesla. I love Tesla. Tesla bought me my house last year, but it's not buying my house this year. I don't own any Tesla right now. I'd love it if I could, but right now, Tesla is it is the company of the future. Juan, you're absolutely right about this. But here's the thing: it's hanging out right at the 200-day line. So really, it's just until we get out of this funk, until we get out of this funk, it's just a tough place to buy. I mean, it's right now it's at 871, And if we look back, let's get in the Wayback Machine here and take a look at Tesla. What I'm going to do is I'm going to turn off. I've got a lot of annotation on this, so I'm going to turn that off. And we're going to kind of go back in the Wayback Machine to see kind of where the support levels are for Tesla. Well, if we go to the weekly chart, we can take a look back on Tesla a little bit here, and we can see that the real support for Tesla is on this line here. Okay, and this line is the is the 10-week line. So the 10-week line, and that is currently at 939. So currently we are below the support, the average support for Tesla at 871. So right now, this is not a good place to buy it because this definitely can go lower. Tesla can definitely go lower. So Jim, where's the support for Tesla? I think it's right here, right now, unfortunately, and that, folks, is way down here at about to 550. Now, is it going to go all the way down to 550? I doubt it, but I'm saying that that's the ultimate support there. So right now, I don't want to buy it until it gets more strength, until it moves above this line here, which is 900. Until it moves above 900 and stays above 900, I probably don't want to be in it. We're in a downward trend on Tesla. So basically, I want to see it move above 900 and stick with that. But I don't want to buy anything long in a market that's in decline. And right now, the market is in correction. So I don't want to buy anything long unless it's in the very best sector. Right now, that sector is the oil and gas sector. It's pretty much, that's the only sector that's working right now, at least for now. Now, that may change, but right now, the only sector that's really working in the market is, is agricultural chemicals and oil. That's pretty much it. Everything else is kind of not doing good. So, as much as I'm tempted to buy, these great companies, I don't want to touch them right now just because, they're selling off. It's just the way it is. Thoughts on SLV? All right, let's look at SLV and see if there's anything that we can see in SLV. All right. So, okay. Well, it is in the energy sector. That is one thing I can definitely think. And this is silver. No, I'm sorry. It's in the silver area. You know what? I would be a little bit careful about silver. Many years ago, before I started investing, my father lost a ton of money in silver. I'll never forget it. He always was convinced, this was back in the 70s, and we had a lot of high inflation. Jimmy Carter was president, and everybody was jumping up and down thinking, wow, silver never can lose because we've got all this inflation. Well, guess what? It did. So I am not a big fan of silver. I know that everyone out there that says, wow, buy silver because it's so much cheaper than gold. It's a great inflation hedge. Well, maybe. Maybe. I don't think it is. I just would stay out of this one. Just because silver, yes, you can make money in silver, but just personally, having been, raised on, silver and losing money on silver, I don't like silver. If you're going to invest in minerals, invest in something like lithium that has a better chance, because at the end of the day, I know that, people love gold and they love silver, but you know what? They do have some, do have some applications in electronics, but you know what? Copper is better than that. And oil trumps everything because, quite frankly, regardless, even if we don't want to talk about it, everybody really depends on oil still, and they have for 120 years. So oil is important. That's where you want to go for inflation. So I don't SLV probably not on that one. Not trying to not trying to dog on you. But no, I don't think so. Okay. What about Microsoft? Well, Microsoft is probably the last man standing. It's probably one of the best run technology businesses in the world. by the way, I started buying it in 2017. I hadn't owned it since 2000, believe it or not. It took 17 years for it to come back to where it had. See, that's the thing about even great companies. I was buying in 2017 Microsoft for the same price that it was in 2000. That it was in 2000 where I sold it. It's 17 years. So even a great company can take forever to come back. Now, does that mean that Microsoft is dead? I don't think so. But its stock, until we get strength in the NASDAQ, I just don't, again, I am not very bullish on anything in tech right now. I just am. I'm just not, because, it's just not, the market has changed. We're in a different market. And if you look at it on a weekly basis, we are in a downward trend on Microsoft. They say that the definition of insanity is doing the same thing and expecting a different result, and we just can't do the same thing like we did 2 years ago. We can't be buying, we can't be buying stock that was fantastic 2 years ago in terms of the chart action, and expect with it in a decline. So right now, it's just not looking good, and we're trading below the 200-day line. So I just can't get excited about Microsoft at these levels. Now, if we're able to pull above that 200-day line, then I'll start looking at Microsoft again. But right now, no. I just don't think. I just think right now it's not the time to be in Microsoft. So Microsoft MSFT is trading below the 200-day moving average, and that's just that's a kiss of death right there. When it's trading below that 200-day line moving average, that means that it's really not viable. It's really not viable. Now let's look at stocks that are viable. Let's go over here to look at some of the giants in the oil industry. Let's look at CVX, which is Chevron. Let's look at the chart for Chevron. This is the chart for Chevron. Okay, so this is in an upward trend. Now, this is not a perfect stock by any stretch of the imagination, but it's getting support, you see, at the 200-day line. So this is moving higher, whereas Microsoft is moving lower. So which one do you want? Now, let's look at ExxonMobil. ExxonMobil is moving higher because they refine oil products. That's the primary reason. You'll notice it's going up as well. So why buy a stock that's yesterday's news? Why buy that one? Right now, the oil companies are in ascendancy. Now that won't last. This will change, and we will see it. We will see it move down once again. But right now, the chart on this, this really started about September of 20. You just started this run. Look at this of Exxon. Exxon was way down here, was trading at about 30. Look at that. It's trading about 30. It has doubled, more than doubled actually. It's 3x'd since that time. So, that's what you want to look for. I think this trend will continue. I believe this trend will continue, at least for a while. Now, it'll break eventually, and when it does, then you want to sell it. But right now, you see, we're coming up to levels. If we go back in the Wayback Machine, I think we can go back all the way to, I don't know, we can't go back that far, but as you can see, we're almost at the, you want to be buying a stock as it's making a higher high, and that's definitely the case with ExxonMobil right now, and it's not, unfortunately, with Microsoft. As good a company as Microsoft is, and it is a great company, it's just not its time. That's the main thing. All right, let's take a look at Oxy. Thank you, Alexander. Appreciate it very much. Oxy is doing well. This, a year ago, not so much, but definitely, it's definitely the thing to be looking at right now. Look at this chart. It's a good chart. These are the kind of stocks that you should be buying. Look at this. We've got a relative strength of 99. That means this is in the top 1% of all the stocks currently. Now, can I guarantee it's going to go higher than this? No, but take a look. Take a look at this. You see, it's making a higher high. This is where you want to buy it. Now, it's a little bit extended. Okay, what do I mean by that? Well, it should go up more gradually. When it pops up like this, it's going to pull back. So you want to kind of wait until it pulls back to one of these index lines. The index line I like to buy off of is the 21-day line. Right now, the 21-day line is at 58.20. We're at 62, so we're about $4 above that line. We're about 7% above that line. Not bad. But I want to see it. I want to buy this basically at about 5% above the 21-day line. There's a lot of reasons for this that I can go into, but this line, this green line, you want to buy it. You'll notice that Oxy is trading above this line. That's very healthy. We want to buy it as it pulls back and then reverses higher, because this is the support. This is the price support for Occidental. Notice how since basically December, for the almost all the time, Occidental has been trading above that green 21-day line. Now, it did pull back here. It did pull back here, but it got support, and then boom, it went right back up. So if you can buy that within 5% of that line, that 21-day exponential line, and if you're not using MarketSmith like I am, or you're using like TradeView or something like that, put in 21 EXP, that's exponential moving EMA, exponential moving average. That's where you want to buy it, as close to that 21-day line as possible. But it's looking very good. And let's take a look at this. Is definitely should be on your watch list, and I'm sure it is. You wouldn't have asked me if it wasn't on the watch list, so I know it's on your watch list, Alexander, which I think is fabulous. It's got a very strong checklist. It's a 89% checklist. The only thing that's missing on this one is the EPS rating. it's below 80, but I suspect by the next quarter this will be above that. Look at this. It's put in 1, 2, 3 quarters, very solid growth. The profits are off the charts, and it's making all kinds of cash flow. Look at this, $12 a share. This is cash flow. PE ratio, 24. Very good PE ratio. Compare this to the tech stocks that are 35, 40, 100. This is what people are going for right now. This is what the big funds are going for. So. Would I buy it at this level? Well, I kind of would like to see it pull back a little bit. And fortunately, after hours, it's going up. It's doing very well. I would put this on the watch list. Wait to see if it pulls back. I would try to buy this right after earnings. And if earnings are good, you should be able to pick this one up. And I think that it's going to go higher. But I would wait for earnings, because in this kind of market, as weak as it is, earnings do matter. And you don't want to buy too close to earnings. Within a week of earnings, you want to be very careful buying, because even if they have great numbers, it can pull back. But I think you're definitely on the right track. I would not buy this tomorrow. I would wait until earnings and then see what happens on earnings. I suspect it's going to go up after earnings. This is a good company, and I think that you would do very, very well to buy it. But wait for earnings on it. Wait for earnings. Let's look at TELL, TELL. And see what we're up for here. Interesting. Okay, this is in Houston. This is oil and gas. Oh, interesting. Okay, so this is in mainly in Australia. Interesting. In the United States. Very interesting. Okay, so just like a lot of the oil companies, international, they're based in Houston. That's not surprising. Thanks, John. By the way, I hope New York is doing well. Hope everything is going well for you out there. Yeah, this isn't bad. It's getting some support at the 21-day line. Would I buy it here? Boy, good question. Good question. You're definitely looking in the right area. Oil and gas, the international E&Ps, 4 out of 197. That's the real place to look at. But this one does have a little bit of a weak. This is a little bit weak here. Maybe we could find something that's a little bit stronger. Though I have to say the industry ratings is excellent here. Let me just see if I can find something that's set up just a tad better than TELL. Let me see if I can find something that's just a little bit better in terms of its in terms of its overall its overall here. So let me pull this up and look at. Okay. Looking at number 4 industry group here, kind of show you what I'm doing here behind the curtain. It's what. So on the industry group ranking, you're definitely looking in the right place. This is oil and gas E&P. This is international E&P. So let's see if we can find the strongest ones in that group, and just look at the top ones and look at their charts. The number 1 in terms of strength right now. It's interesting. Oh, this is interesting. I think this is an Italian company. I'm not sure. Yeah, Oxy. That's the one you ought to be probably looking at. OVV, Oxy, ConocoPhillips, Haas. Let's look at Hess. This is one of my favorites, and I haven't traded it in about a month or two, but I do really like this one. This is one I think you ought to look at. This one is an international E&P company. It is not at a buy point right now, but it's coming out of this base. Yeah, see, it's coming out of this base, and it's very close to the 21-day line. Let me see if I can pull it up here. This is one I think that you might want to look at. Is Hess. Yeah, it's 2% off the 21-day line in an excellent group. This is one you might want to consider buying. As you can see, it's right about it pulled up and then it's pulled back to that 21-day line. I think this is going to continue to move higher. So where I would look to put in a buy on this one, I put a limit order in on about at 108. Currently it's at 109. So I would put a limit order in about there. This is one I think instead of TELL, you might want to look at this one, Hess. Of course, it's very big in the New York area, actually, by the way. But Hess, this is one I think I really like. I'm not in it currently, but I've traded this one very successfully. I like the way this one operates. It's small, but it's a smaller international E&P company, but it's big enough. It's got a lot of things going for it. So that's one of the ones that I think that you might want to take a look at. But thanks for that. ABV, ABV of Y. Let's look at that for Alexander. And see, yeah, oof, yeah. This just fell off. This is why it's so dangerous holding into earnings if you don't have a 10% cushion. It's amazing how that happens. But yeah, we went right through earnings and then boom, look at that. It just took a swan dive and now it's starting to make a move back up. Would I buy this? I'd be really careful about this one right now. I do like the fact it's in the medical, but in this market, I'd probably pass on this one. Even though it's strong, even though it's this is a leaderboard stock, there's a lot of good stuff about this one, but I just think with this market, I just don't think buying out of the strongest areas, I think right now is not a good idea. That's just my opinion. So let's look at the SQQQ. The SQQQ, this is an ETF that moves against the QQQ. So basically, what's going on with this one is if the QQQ goes up, this one goes down. If the SQQQ goes down, this one goes up. And right now, I think we're looking at the SQQQ. The Q is going down once again because we're getting weakness in the market. So I definitely think we're getting this one could be time for this one. Let's look at how close it's above the 200-day line. It's above the 50-day line. It's above, yeah. And this is the correct lineup for the indexes. 200, 50, 21, and 10. And this is interesting. The 21 has crossed above the 50. That's very good. That's bullish. And it's moving up. So yeah, I think this is viable. I think this is probably viable tomorrow. Let's look at the reversal line on it. Yeah, I think this is definitely viable. I think this is viable right now. Normally, there we go. All right, so basically that's the reversal line. It's traded above that reversal line. This is the buy point here on a cut basis. The 52.87 is the pivot on that. So yeah, this is viable. You know, ProShares is viable. This is viable. I would probably try a half position. Thank you for bringing this up. I'm going to put this down on my list. SQQQ. Now, I did have the Qs. I sold it basically on Thursday of last week into strength. I did make a little bit of money on it. Not a ton, but I did make a little bit of money on it. All right. Are we going to see more selling on the QQQ and the SPY? Absolutely, we are. Absolutely. Yeah. Unfortunately, we are, George. I wish we weren't, but you know, you can use the SQQQ to go against it, but I think we are going to see more. Yes. Yes, I do. Yes, I do. DraftKings. I know it's bad. Need 17. Okay, let's look at DKG. I wish I had better news for you. I wish I had better news on DraftKings, but I think you'll see that this chart is just horrid. Yeah, look at that. Now we're at 14. You know, boy. You know, Jay, I wish I could be more encouraging. I wish I could be more encouraging here. But actually, if you're looking to short that, this is not a bad short. This is not a bad short. It's hit the once, twice. Yeah, that's a short. That's a short right now. I think this could go lower. I think this could go lower, unfortunately. Yeah, let me see where support. Boy, I think this could go. I think this could go down to 10. I think it's going to go in this market. Yeah, I think this could go down to 10. So, you know, if you know, I know that you don't want to take a loss, but try selling half of it. Try selling half. Try selling half. DVN. Let's look at DVN. This is probably the last symbol. Thank you, everybody. DVN. Let's take a look at DVN. Okay, Devon. Oh yeah, great. This is a good one. I forget about Devon Energy, about how good a stock this is. Up in the after hours, moving up that 21-day line. Let's go to the daily to see if there's an entry point here. Yeah. If you can buy it close to that 21-day line, that's not a bad place. We are how far off the 21? Yeah, we're 9% off the 21-day line. Okay, here's the thing with Devon. You need for it to move closer to the 21-day line. Now, currently, the 21-day line is at 61.32. So we're basically about $6 above where you can buy it. Here's what you got to do. And this is tough. You got to watch this one. Put this on a watch list and wait for it to come down to about 61.62. That's where you want to buy it. So what you can do, and what you can do in this one is put in a limit order. So I would put on this one. This is viable. Limit order at, I'm going to pay about 62. I think is going to be your better bet here, because we're still too high. We're not close enough to that 21-day line. We need to come back down to that 21-day line. But this is a good stock. It's definitely worth it. But you don't want to buy it too extended. And right now it is, because anything over 5% above that 21-day line, exponential moving average, that's in this market, that's extended. So it has a good checklist. It's good on pretty much everything here. But I want to buy it closer to that 21-day line. So I would put in, if you're interested in picking this one up, and let's see, did we come through earnings? Yes, we did. That's good. I wouldn't buy this into earnings, but we're after earnings, and the earnings were very good. Sales are up, profits are up. So this is probably going to go higher, but we don't want to buy it extended. Right now it's extended at 68. We want to buy it closer to 62. So I'd put in a limit order at 62 for a half a position. So that's kind of what I would do. Well, thanks everybody. I guess it is, let's see if I have one more question, and then, take a look at Baba, right? Let's take a look at Baba. It's going to be, Yeah, I don't know if Baba is going to be very, very appealing right now. Yeah, it's just going down, down, down. Relative strength is 14. They did have earnings though. Well, no, they haven't had earnings yet. Yeah, this is just no. I wouldn't touch this one. I wouldn't touch this one. Though, what you could do on this one, because I'm looking at shorting opportunities here. So I think this is shortable. Yeah, I think this is shortable. Let me go out further the weekly chart, see if I see a pattern there. Yeah, I think this is in this downward trend. I think you could do a nice put spread on it, and it looks like it's going to continue down. Let's look at the monthly chart. Yeah, look at that. It's starting to really lose strength. I mean, yeah. See, if it falls below here, there's some residual support here. Yeah, this is you could short this. You could short this. Not the greatest short, but it's kind of a slow motion train wreck. So I would, if you're down more than 7% on that one, please sell it, because I don't think it's going to do much better than that. But until Monday and until tomorrow, happy trading, everybody. Thanks for watching. And if you're not already a member of the Action, oh, by the way, I just wanted to reiterate this. Please like the show. It helps us get out to a lot of people. So please like it. Appreciate it. Both on TikTok and on YouTube, and also on Facebook, because we're on Facebook too. Also, please, if you haven't already, sign up for the trailer. It's very easy to do. Just go over to www.Dallas Trading Floor, and first and last name and email address, and you'll be set up on that. So until tomorrow, I'll be back at 5 tomorrow, Friday. Hopefully we'll have some better news than we have, but we may have some good shorting opportunities. I'm going to try to put my thinking cap on and see if I can come up with some ideas on how we can make money in this downward trending market. So until tomorrow at 5, thanks, everybody. Happy trading.